week, and finally we get some weakness. August starts off with a pullback, some bad economic data, tariffs continue, earnings were strong. Still a lot of stuff going on. Let's just get right to it. All right. Well, so the S&P was up 3 months in a row. So we were due for a pullback. Should not be surprising at the same point that we saw the S&P pullback after 3 straight up months. I continue to say that the trade for people getting focused on, at this point, non-equities, especially on the rate side, this has just been a death trade now for really the better part of the last 3 years, or 2.5 at this point, or almost three. You're just getting back and forths on 10-year rates while we sit around this, 4.25 area. I'm sure that'll change at some point, but I just don't think it's the trade. The dollar saw a huge move in July, and we've reversed a little bit on Friday on the back of the weaker data. But for the most part, the dollar still looks like it's in a counter trend move at this point until we get more confirmation that the Fed may cut rates and that the economy is okay. I posted this on Tuesday. I keep this white line here is what I call a spec basket. This basically contains all the areas of the market that I do not think are ready for prime time yet. Things like quantum. It's all the high beta names that are inside these areas. And it really fits in with retail, which has had a dominant part. So this is not something in the past that I would have focused on, but because retail's had such a big part of the turns, I think following the spec basket actually matters a lot. It definitely does for crypto as well. So you can see it led the move lower here. And I posted this because this is the NASDAQ. We had been above the 28 moving average for, I think, the longest time since the 1980s. So we were due for a pullback. We were due for the NDX to get on the 20-day. So I posted this on Tuesday, basically saying we were seeing the spec names already leading. I think that's what people should be looking at whenever we've had these kind of big moves. And on the dollar, Goldman posted this. I mean, the dollar is going to weaken trend, which I'm part of that camp too. But currencies weaken and strengthen, especially when it comes to the dollar. This is a long-term view to me. This is not a short-term thing. In fact, a lot of it, from my perspective, has to do with the democratization of AI and not what everyone else is seeing. The democratization of AI should allow other countries to benefit, but I also believe that we're entering the hardware side. So the dollar, when people get caught into the U.S. is going to default or anything along those lines with rates moving higher, I just don't see it as something to focus on. In terms of a level for the S&P, we did break the 20-day here. You can see in the S&P, we also had been above it all this time period. And then we had gotten below here, but closed back above it. We broke it. I think we need to do some work here between the 50-day, which is also the prior highs around the 6130 area, and 6400. I think that makes sense. I still think the market is going to end up trading higher into the end of the year. But I think for the time being, especially for the next few weeks, which are seasonally bad, but also because we've had such a long run, people need to remember that we need to consolidate things. I don't think this is turning into something negative, but there were reasons that people were worried on Friday. This is the 2-month revision chart. So minus 258,000. This is going back 12 years. That's how much data we have. Only one time, basically, in the worst of COVID, when millions of people were being laid off, we haven't seen anything like this. So the revision was massively negative, down 258. That started the point of getting people negative. We had the PMI, which I'm focused on, obviously, for the second half of the year, came in below the lowest estimate. So we had a miss on the PMI. Then we also had house prices down month over month for the third month in a row. And then finally, Friday brought back tariffs. So everyone started to combine everything together. We end up getting a sell-off. When you go through the payroll numbers, I think it's important because there's clearly a story going on here. And I've shown this before, but these are the monthly totals going back to April of 24. And what you can see is now with those revisions, the last 3 months are basically at just over 100,000, so somewhere around 30,000 a month, 35,000 a month. And then you can see how far it's dropped off really since the inauguration. So we had already moved down to the hundreds. You had been higher than that, especially leading into the election. But you had these kind of negative numbers. And what I really want to highlight is what I've said before, 19, 14, 73. If you basically take this line out, which again is all healthcare services, it says education and healthcare, but really we've seen the education side actually go negative. This is all healthcare services. So without healthcare services, we'd already be at negative jobs right now. Just important to keep in mind because we do have a weak jobs market. There's no way around it. This is the jobs market X two parts, the healthcare and education services, but also the leisure, which think of as travel. This is a 5-month average. So we've had negative 13,000. You got to go all the way back to the recession periods to find anything this way. So underneath the hood, when you strip out healthcare and education, you have an economy which is just not that strong from a jobs perspective. This is the diffusion index, which takes another way of looking at it. This is the 3-month diffusion index, which is posted back-to-back months now under 50. Again, that means less than 50% of the industries in the U.S. are creating positive jobs. Historically, that's been a recession time. That being said, when you look at the aggregate, so everyone focused on the payroll numbers, which again, you're going to have two things that are happening. One is AI. The other one is that immigration has been reversed. And so the population growth is not there and we have a labor shortage. So with the demographics, you're going to have more people rolling off every single month, which is going to take down the payroll numbers. So I expected, as I've talked about for really the last few months, less than 100,000 for the second half of the year, probably closer to 50,000. We're below that right now. I do think we'll see a little bit of a bump from some of the PMI areas, but we still have the issue with no hiring. So what this is the aggregate. I've shown this before. The aggregate number was actually very good. So when you look at the last 3 months, you got one little negative, you got positive. But remember, this takes into account not just the number of people hired, but if you're not hiring as many people and you're putting more hours on and you're paying them more money, then you end up with an aggregate number that's still okay. And when you look at the 3-month average for the aggregate, it's still completely fine. So the jobs picture is about not hiring people. The claims shows the exact same thing. We had a run up in claims. I showed this. I showed all the kind of warning notices stuff that were up here. But since June, everything's come back down. And the claims data is basically sitting near the lows. So this is about a problem not with firing people. It's a problem with hiring people. In terms of the tariffs, you get these stories, and I just want to emphasize this point as to when people see these stories, like Ford warns of profit with $2 billion tariff hit. Sounds like a big number. Whirlpool stock tumbles. The combined market cap of these two companies, Whirlpool and Ford, old economy things related to housing and related to autos, which historically drove the economy and certainly drove the PMI, which every single economist puts a lot of stock in. This is an AI trade. This is not about these companies. The total market cap of these combined is about 50 trillion. I bring that up because here are the earnings or the revenue numbers for Amazon, Alphabet, Apple, Meta, Microsoft. You see down here, we've got 81 billion versus an expected 79. If you take the differential of all five, those companies beat estimates by $18 billion. Bigger than a third of the market cap of those two stocks. Those stocks don't matter for the S&P 500. These companies do, and that's why when Meta and Microsoft beat, two multi-trillion-dollar companies moving 400 billion after hours, both companies beating revenue by 3 billion or more. The analysts thought they understood how fast this world was moving, but Meta and Microsoft basically told the world that we have no clue and about how serious the shift to AI in this new economy is. And I will continue to say it. The only thing that matters on the macro side is artificial intelligence. And in particular, you have to look at this stage at the earnings side. We had the build out, which was all about NVIDIA and compute. Now we're getting into two new components, the build out for energy and the acceleration on the data center because of the reindustrialization, but also the adoption side. As more and more companies use AI, you start to see these companies beat because There was still more demand than we have supply for the moment in the massive cloud computing segment. That was from Amazon. We continue to see exceptionally strong demand from enterprise for cloud and AI services, and demand is ahead of our available supply in several key regions. We are accelerating our data center build out and GPU procurement to meet the supply. Constraints on high-end AI infrastructure are expected to persist in the next several quarters. That was from Microsoft. And then Sundar Pichai, AI-related demand for cloud infrastructure continues to outstrip supply. Basically, no matter how many times you're going to look at this, the adoption phase is happening at the company level. As they use more AI, they need more cloud. As we have more AI agents, the numbers go up exponentially. This is what's coming. So these numbers on the adoption side are going to lead to more revenues for these guys. At the same time, more profit margins for those companies because they need less hiring. The build-out's coming. You can just go through this from the economic basis. This is why companies like Ford and Whirlpool have nothing to do with the US economy in terms of growth. They matter for some jobs, they matter for the housing market, things that are not part of the digital world, and this is why people have to make the transition. In terms of one of the statements from Microsoft there, we have 368 billion of contracted backlog we need to deliver, not just across Azure, but across the breadth of the Microsoft cloud. 368 billion of contracted backlog. You're going to see a lot of backlog from me in terms of this this presentation today. Remember Microsoft, Cowen came out and said, put all these data center fears. Andrew Roth talking, but oh yeah, I'm good for my 80 billion. Nadal says he's now good for 120 billion. Basically, all the hyperscalers in some way took up their dollar spend. American Electric Power Boost is a utility. You have to spend time on this company. Utilities are not going to trade like utilities. These are not boring companies. They are setting long-term contracts. They are bidding from pricing power. AAP Boost full year outlook as data center boom fuels operating earnings. Unprecedented loan growth. They reported an expected 24 gigawatts of new customer load by 2030, most of it backed by signed customer financial commitments that insulate AOP and our customers from sales-driven earnings volatility. Again, energy companies, I don't care if it's utility, they've been cyclical in the past. There's no recession coming up from AI. This is a substantial jump from 21 gig forecasted earlier in the year. So you've got a 15% increase on their numbers on that. Commercial load driven by growth in energy-intensive subsectors. AEP is raising its 5-year capital investment plan. They don't get included in this stuff. 70 billion from 54 billion prior. Citing data centers and AI AI infrastructure. And again, record backlog of requests. The company has over 190 gigawatts of additional load requests. Currently under study, 190 gigawatts. It's massive. Vertiv reported they've been one of the darlings in this. Another earnings report, unprecedented data center growth, tethered to the hyperscalers, driven by AI buildouts. The company reported record backlog and a raised book-to-bill ratio, signaling persistent and growing AI-centered demand, fueling future results. Schneider Electric, data center market seen as exceptionally strong. On the call, executives acknowledged that demand center clients is at times outstripping Schneider's current supply capacity, especially for high-density modular and liquid cooling systems, accelerating investments, capacity. They're hoping to catch up with orders. It's not just in North America, it's in Asia. We are seeing underlying demand for our data center solutions grow faster than any time in our history. Customer requirements for power and cooling, particularly driven by AI, are challenging the industry's ability to deliver capacity quickly, a record backlog, and a historic order book. Again, these are different companies. They're in different parts of it. Here's another one. This is Celestica. Emphasizes expanding portfolio, especially networking, servers, robust demand from leading technology companies. Major long-term secular. You can see the things are involved in here in terms of power management systems. This is a network company. Then you got Hubble. Again, another industrial. The growth in data centers was supported by solid demand from key vertical markets. Hubble emphasized that the ongoing AI boom and grid modernization are strategic macro tailwinds, supporting short-term and long-term growth in its solutions portfolio. Comfort Systems, Fix. Backlog hit a record 8.1 billion. Stock was up huge. after the earnings. Panasonic battery, I'm not going to read you this one, but just know that this is going on in the battery and storage side as well. API Group, which again, not one you'd basically be seeing on this, but we continue to see demand for our mission critical building and safety services outpace expectations. So this is on the safety and specialty services. They have a backlog in that area as well. And then we're starting to get to an important area. This was one of the first transport companies that mentioned it. It's starting to show up. Segments benefit from specialized freight such as heavy haul, construction materials, and data center equipment that command higher margins, are less cyclical than dry van. It's starting to show up in this. And again, I think people have to pay attention that as the shipments of construction materials, equipment, and modules for hyperscale and AI-driven projects, these specialized and heavy haul moves command premium pricing. You're only starting to see the stuff that to me would be the PMI side. I don't expect the PMI to show the big move until we get at least a couple more months out. The time period that I'm comparing this to is most closely is actually in the 03 period, from 2000 to 2003, because of the overbuild in tech and the dot-com bubble. We had a PMI that for the most part averaged below 50 during that 3-year period. I remember trading in 03. I started my hedge fund in 03, and I just remember people were very, very bearish on the economy. Rates were sitting at lower levels, and all of a sudden we had a PMI print that missed in May. Then it beat slightly in June, and then it beat big in July, and that started a fairly big change in everything. And then the PMI stayed basically from 2003 to 2007 above 50. In terms of the PE ratio, because if anything shows up on X, most people are talking about valuations again. I've talked about this before, but whenever I see another person that puts this out there, this one is from Duality Research. Here's the profit margin chart. We are entering a period where profit margins are going to get better from AI. It's going to happen. You're going to have to go through this. And as profit margins get better, the valuation deserves to be at a higher level. That's what they're saying. So they've created an adjusted valuation based on profit margins. This is not something to just pick something random. If profit margins were to come down, then the market should come down. But if profit margins stay at high levels, it should be a big thing for valuations. Mike Wilson, who's had a good call this month, did get bullish down around the 5,000 area after the correction, and talked about the fact that the earnings look good, and basically highlights something important that I think is worth putting in here. He's talking about the fact that more resilient earnings, cash flow backdrop than previously expected, and improvement driven in part by AI adoption, we talked about, the weakness in the dollar, even though it strengthened over the course of the last 2 weeks. It has been weaker significantly by the year. In fact, the worst first half of the year in history in the dollar. You're getting the cash tax savings from the one big beautiful bill, and pent-up demand for many sectors in the market that have kind of been on hold because of fears over the tariffs, where at a minimum, we're way past the uncertainty point. We now have peak certainty, in my opinion. And he goes through, we're already seeing earnings revision breadth has improved considerably. I've shown that. And he talks about a lot of different things, but I think the AI adoption is a big thing. And then one more thing for people to remember is the high probability of more Fed rate cuts in the first quarter. That's why the numbers on Friday that were on the weaker side, for people that want to look for the next bullish catalyst, cutting earnings into a PMI cycle that bottoms and goes higher is going to be very, very bullish if that's what plays out, and I think it is. And the reason I think it's going to play out is because of this. So I want to emphasize, as I go through these charts on the data center build out, that if you haven't taken the time to realize how much is now ongoing now, it's exploding. So we've had data center growth. This chart here, the yellow things are the operating data center infrastructures. These orange ones, which are popping up all over the country, not just in any one area, but across the country, those are the under construction ones. And then you have the white ones all over the place here, which are the proposed ones. We have more proposed than we have anything. And here's what you got. New Jersey, massive data center. Nevada, massive data center. Texas, massive data center. These are all reports from this week. So these are all in the final 8 days of July. This one is in Wyoming, the AI boom that could outpower an entire state. Virginia was already a major place. They're talking about the impact it's having on logistics. And then you can see this massive structure here, which is in Arizona. And this is on plans to build the biggest project. San Jose, San Jose has forged powerful lines to strengthen the city's electric grid and meet the soaring energy needs. Partnership includes with projections of nearly 200,000 new jobs, primarily in construction. We have labor shortages with inside the construction and energy place. I'll talk more about this. OpenAI launches Stargate in Europe. European data center power demand to double by 2030. This is not just a US thing, so you should see growth around the globe from data centers, including Asia. An interesting comment from a former Meta employee: energy is the biggest bottleneck right now. If we look at any of the transformers or any of the power equipment or cooling equipment or even the construction or availability of power, there is no way it's going to happen, meaning the spend on the CapEx. If you talk about Schneider, who supplies a lot of power equipment, I showed their earnings, they're completely full with a back order until 2030. They're not negotiating on price. It's basically you're lucky to get an order. Everyone talks about NVIDIA, but there are many other things beyond NVIDIA for this thing. Even if you have the money, you can't spend it. This is going to become a story about energy and about power. So I continue to say it. Factories are the new power users. So you're getting into this construction, manufacturing. Again, this is becoming the big thing that is going to explode. Who pays? AI boom sparks fight over soaring power costs. Again, when I do these things, I'm picking stories from the week. Utilities and technology companies that are odds over who should pay for the electricity costs. I wonder who Trump is going to make pay for this when it comes down to it. I don't think the consumer is going to pay for it. I think the hyperscalers will find a way for them to have to pay for it. Just stories across the country about the power needs and about the rising electricity prices. And now you're finally starting to see at least stories show up on an element that I think is important. If we get to the point where oil, I had someone reach out to me and say, well, oil's not going higher. How can there be a power situation? We now have Brent solidly above $70. We have WTI right around $70. This is all despite the fact that the energy price is higher. We've had production increases from OPEC Plus. We've had, obviously, a spike that happened on the back of Israel going into Iran. It fell down, but it stayed above the price that we were before it started. So you're starting to get this, but I think this is an important thing because as commodity prices, and in particular, certain things go higher on the tariff side, it's very, very difficult for energy production in the US to continue because if you've got rising labor demand that's coming from shortages in labor for construction and you're looking for labor in this part, you've got a problem where the cost of steel, labor, and frac materials, in part due to tariffs, become an issue. So you can control some of the tariff prices at some point, but in terms of it driving up oil and the key power side, it's going to fit into it if all that stuff has got it. So just remember as this plays out, it's still very early in this. I think it's going to take, for building this stuff, the ordering of it, we have just gotten out of the uncertainty over the tariffs and the one big beautiful bill. Now they're in there and the White House has done the AI action plan to basically get rid of permitting. Deregulation is going to be a major driver. When I've talked about with clients on this for 22V and I've done presentations, this reminds me a lot of the way Trump did the fast track on the vaccine. When you take out deregulation for something this massive and important to the group, where we need power, we need AI, I would expect that this is going to be a major push. We also have the rare earth problem. There was a meeting at the White House this week, and I showed this last week. The mining side is going to be important. At the same point, this is starting to become something. We still don't have a trade deal with China, and I've said that I think the trade war with China is over. But now we're starting to get into something that I think could be a little bit more important. So Besson says we're on the cusp of a trade deal. I watched this YouTube with BG2 with Brad Gerstner, who's been very, very good this year. And I don't know how much of his knowledge on the right time for things. He kind of got the turning point on the tariffs right. He seems to be heavily involved with the White House to some degree, whether that's from information coming from the tech people that are there, or it's because he was involved in the $1,000 investment portion that they were doing for kids. But he said on this podcast, I think this president wants to do the biggest deal ever done with China. Besson's been very clear. China has to rebalance to domestic consumption and away from an export economy. I think this is important because a big deal with China, even if it's only for the next 4 years, will involve something, in my opinion, on China that they have to focus on. I think they're feeling the pressure from the export side, and they continue to talk about needing to step up economic policy support. And even though everyone in the U.S. continues to I guess fade it is the best word to use. I don't see how the country doesn't do enough to continue to grow near 5% and continue to err on the side of growing a little bit faster, but also the AI race and the need for knowing that the US is racing faster on AI and on crypto is forcing China to get involved. Again, she is very much tied right now to China's economy. So he needs to get this going. How China is girding for an AI battle with the U.S. China is ramping up its efforts to build a domestic AI ecosystem that can function without Western technology. Again, I bring that up because neither country wants to fall backwards. In terms of the tariffs, just keep paying attention. I still think this White House is doing everything that they possibly can to help Americans that are in the position of fighting off inflation, dealing with housing affordability. I still think there's measures to come. Rebate checks, just another thing to keep on the back of your mind that I think they're emphasizing growth. Back to the Fed this week. They kept things on hold, but there were two Fed officials that dissented. That wasn't all the story for the week. Historically, dissensions are positive. They often, as this was put in, governors often lead policy moves. So again, I wouldn't treat it as a nothing. I think the market still expects the Fed to go, and I think after the data we saw this week, we've put the September probability up above 85% as of late Friday. This didn't stop Trump. Jerome Too Late Pal, stubborn moron, and then of course after the jobs number, I've directed my team to fire this Biden political appointee immediately. So the jobs number thing, Trump is not going to stop until he has the economy booming. The economy is booming under Trump, despite a Fed that also plays games. I just think this Fed story in terms of cutting rates at the same time that I think there's a delay and we're going to see the increase coming up with PMIs at the same time that the stock market's near all-time highs. And you guys remember what happens if you cut rates and you don't get a recession. It is bullish. We've now been on hold. You'll start seeing things saying if you're on hold and then you cut rates again and you don't go into recession, it's a big deal. We did have a Fed governor resign on Friday, and she was in the hawkish camp. So we're losing someone who was, at least according to that person, on the hawkish side. Best podcast to watch this week again was Moonshots. Moonshots has been a go-to because they've been doing such big, broad topics, combining AI with the economy, and this one was no exception. They spent a lot of time on the AI plan. The panel describes President Trump's AI action plan as an unprecedented in size and ambition, effectively positioning the U.S. on a war footing in the global AI race. I want to remind people, this is not in any way a political podcast. This is 100% with MIT people. All of the people that were on this episode, Alex Gross, Peter Diamandis, David Blunden, they're all MIT graduates. These are all people focused solely on what's happening in technology. All of them are heavily involved and invested in the AI space. It's a global AI race. It's not just a policy update. It is an industrial scale mobilization comparable only to the Eisenhower era interstate highway system or even the Manhattan Project. I don't know how this doesn't say PMI going higher over the course of the year. It is big. This is potentially the broadest U.S. industrial strategy we've seen since Eisenhower. Is it a plan to turn the U.S. into one huge AI factory? The deregulation and acceleration, again, this is really, really important to fast track. Fast track was important in the vaccine for COVID. Infrastructure and energy build out. We need both the infrastructure for the data centers. We need the energy, the cooling systems, enter that. Energy, not chips, is the bottleneck. We're at a different stage. We were using excess capacity of energy and using chips that were available. Now we've got back orders of everything, and we've been under invested inside the industrial space for turbines, for transformers, for cooling systems, for everything. It's going to take a while for this to catch up. Again, it's electricity. We are not chip limited, we're electricity limited. Calls out nuclear and geothermal, but not solar. This is an important point by Blunden. Even the best solar strategy doesn't matter if you can't deploy it fast. The plan is about what we can build now. Now is the critical thing. Rehard Jark put this out. We're still underestimating the massive demand for AI chips, data centers, and energy. We're in a world where nothing big ever happens, so we have no way of processing it until something big happens. Peter Thiel said that. This is this PMI thing. We're living in a world where nothing big ever happens. What's happening in AI is about to go parabolic, and people are not on top of what it means to go to the inference workloads. And then we're going to go into AI agents, which transforms everything. And then when you get past that, you've got to add humanoids, AV, AR, all being unlocked by these breakthroughs in the next 5-10 years. You have a massive super semi and energy cycle that we're all severely underestimating. There's no way that it doesn't happen other than supply not being able to be met by demand. On that podcast again, building an atomic bomb can never be done unless you turn the United States into one huge factory. The AI action plan is doing exactly that. We are on an acceleration of the acceleration. This is being executed by executive order. This is not a matter of if, it's a matter of go. Unlike typical U.S. industrial strategies that change with political winds, this plan has continually guaranteed for at least 3.5 years under a single administration. And it's synchronized, and this is the important point which I'm going to get into, the expected peak of AGI development. We're incredibly lucky. We have continuity for 3.5 years right through the AGI explosion window. The AGI explosion window is happening now. This is where things start to go parabolic. And they talk about the fact that David Sachs, because he and the brilliant people in Washington are making it clear to what DC that this is not a question of whether we should do it, we have to do it. And this is what was released by Zuckerberg this week. Over the last few months, we've begun to see glimpses of our AI systems improving themselves. The improvement is slow for now, but undeniable. Developing superintelligence is now in sight. I talked with Anthony Pompliano about this on our podcast yesterday. What they're talking about is reaching the point of recursive self-improvement. When AI is able to learn on its own, how fast will things speed up? This is the critical part, and we talked about it in Pomp, but I just want to make sure you guys can think about it. You can go do your own search on there. It can learn, write, and improve on its own code without human intervention. Things could speed up at an exponential or even super exponential rate. This concept is referred to as the intelligence explosion or hard takeoff in AI theory. If we're nearing 100% time savings and AI is writing itself at this point, Alex is saying we're already there. If math and physics are about to quote, unquote, solved by AGI, maybe we'll know as soon as the next 6 to 9 months. Why it speeds up: faster model improvement, automation of R&D, which has huge implications for healthcare, quantum, everything, and elimination of iteration delay. Once AI starts improving itself reliably, months of human progress could occur in days or even hours, leading to breakthroughs across all scientific domains in compressed timelines. That's the part that right now the market has not priced in. It has huge implications for everything. Recursive self-improvement is imminent. If we're nearing 100, I already went through this one. Yeah, all this stuff is already there, so I don't need to go through it again. We're talking about having centuries of progress happening in years now. Within 3 to 5 years, this is from Eric Schmidt recently, we'll have what is called AGI. This is possible because of a process called recursive self-improvement. They're able to learn on their own. It represents the critical threshold when AI systems begin improving themselves. And again, I'm bringing this up now because these are all the leaders of AI saying the same thing. Lex Fridman. So that podcast from Eric Schmidt was 2 weeks ago. Lex Fridman was 2 weeks ago. Alpha Involve enables on the programming side something like recursive self-improvement, potentially. When you hone it at it, it's very good at incrementally improving that. Sam Altman, we're now starting to look ahead to superintelligence. This is the kind of brain of the world. It will be personal, adaptable, easy to use. It will give people incredible superpowers that were sort of science fiction only a couple years ago. The limit won't be the algorithms and the research, but it increasingly becomes the physical instantation that it takes to make this work. Chips, cables, servers, energy, everything that you need to power this brain. Again, we are at that point now where it's accelerating, but think of it as it needs unlimited food. The power that it gets is food. We don't have enough food to feed this, so we have to build it. And if we don't build it fast, and China will build it fast, you can see where this becomes not only self-improvement or self-learning, it becomes self-fulfilling for all the reasons that I mentioned. GPT-5 launch is coming. This will accelerate the talk of it. And it's coming very, very soon, possibly next week. Sam Altman says he's afraid of GPT-5 creation. What we have done, raised an alarm and concern over the company's soon to launch AI model, which is rapidly outpacing oversight, learning on itself. Again, We're at an unbelievable point in history. Anthropic, I'm bringing this up because they near a funding round at 170 billion. XAI, Musk's one, got one at 200 recently, and OpenAI got one at 350. These are all private companies that combined are approaching $1 trillion and will probably be there. That just shows how fast these are moving. Bitcoin, sharp correction. Again, these are the monthly numbers. It's down 2% for the month. I continue to believe Bitcoin will represent, and its growth will mimic AGI or mimic AI as it goes. It's the purest way to AI. This was a big week for just the administration again moving forth. This was an op-ed by Besant in the Washington Post. The highlights of it I'll leave for you guys to read. It's all stuff we've talked about on here, but they are dead serious about all of this stuff being a big part on it. They are focused on this being an AI race as well. They think this is a dominant force to get ahead, especially with stablecoin. This is a 166-page report from the White House. Strengthening American Leadership in Digital Financial Technology came out this week. We are trying to own the guardrails of finance. The SEC rolled out Project Crypto to rewrite the rules for digital assets. No other country in the world is doing this at this point. President Trump says Bitcoin is amazing and producing a lot of jobs. He views cryptocurrency as an industry. This came out in Project Syndicate. I think everyone should be reading these now as I'm highlighting the stuff that came out this week. This just shows the breadth of what's going on. Everyone in the traditional finance and the traditional economic world is finally talking about crypto and stablecoins. A year ago, no one was talking about this other than it being a scam and speculative. Stablecoin, this is a great article to read in terms of understanding stablecoins, but kind of connecting it back to macro and where we are, how fast this person makes the argument, which I agree with, that it's going to accelerate. This stablecoins and transactions in the ecosystem, the network effects are about to explode because of AI agents. They are directly tied back to the AGI side. If you are spending time worrying about tariffs, worrying about PMIs, worrying about job losses and everything in recessions, you're missing out on what matters. Stablecoins are far more important than Whirlpool at this point. Stablecoins, ECB, are reshaping global finance with the dollar at the helm without a strategic response. This is important. From hype to hazard, what stablecoins mean for Europe. Hazard for Europe. If they don't have a plan on them, they're in trouble. They realize it now. Stablecoins are reshaping global finance with the US dollar at the helm without a strategic response. European monetary, they're finally starting to pay attention that if the banks are launching them, how quickly we saw Silicon Valley Bank lose all of its deposits. Think about how quickly it would happen in the traditional finance world if every bank was connected to stablecoins, where it's taking seconds. At least at Silicon Valley Bank, it took hours to days. We're now talking about seconds. Ex-Bank of China chief warns of major risks from stablecoins, criticizes U.S. efforts. Everyone's going to get more involved in it. They have to get more involved in it. It's going to be a race. Every G country is looking to buy Bitcoin for its reserves. Hyper Bitcoinization has begun. Completely agree. And again, I'm tying it completely back to AI. And you've still got every company will be a Bitcoin treasury company. If you want to have assets and money saved in a place where they're not getting debased, owning treasuries will be an issue, and more people will continue to look as Bitcoin as something that goes in because it's the future. Even Ray Dalio, who had been positive on Bitcoin but not egregiously, went out and recommended a 15% allocation to Bitcoin. And then finally, I just want to remind people, if I'm right about the PMIs going higher and everything that you saw here, that AGI is fueling PMIs to go higher because the build-out is happening, because of deregulation, because of fast track, because of back orders that all companies are reporting right now, because trucking companies are starting to show it. This is what Bitcoin has done during PMI rises. We've also had the printing of money. I continue to believe that's the story. That's it for this week. Hope everyone's having a great summer, and I'll see you next week.